Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden stories within corporate filings. Today, we're diving into a filing from Tharimmune Incorporated, and let's just say they've been busy changing some of their fundamental building blocks. We've got a recent report from Tharimmune Incorporated, and it is not about exciting new drugs or groundbreaking research. Instead, it is about something a bit more structural. Think of it like rearranging the furniture in a house, but for a company. This report details some key changes Tharimmune has made specifically related to their stock. It's all about how many shares of their common stock the company is allowed to issue. So, what exactly happened? Well, Tharimmune filed a certificate of amendment to its certificate of incorporation. That is a fancy way of saying they officially changed the rules about their company's stock. The big news here is that they significantly increased the number of shares of their common stock that they are authorized to have out there. Before this change, they could issue up to 250 million shares. Now, they can issue a whopping 1 billion shares. Why would a company do this? It generally points to a few possibilities. One, they might be planning for a future stock offering or a significant acquisition where they'll need to issue a lot more stock. Two, it could be a preparatory move for something like a reverse stock split, which makes the share price appear higher and can sometimes make a stock more attractive to institutional investors. They are indeed registered on the Nasdaq Stock Market LLC under the ticker THAR. And it is worth noting that Tharimmune is an emerging growth company. These companies get some flexibility with financial reporting rules, and they elected to use the extended transition period for complying with new or revised financial accounting standards. This means they can stick with older accounting rules for a bit longer, which can sometimes make comparisons to other companies a little trickier. Scroll Certificate of Amendment to Certificate of Incorporation. As amended dated the 10th of October 2025 Fine Center, the filing itself is pretty straightforward regarding this change. It states clearly that the total number of shares of common stock authorized for issuance has increased from 250 million to 1 billion. Scrollatum 5.03 Amendments to Articles of Incorporation, or Bylaws, change in fiscal year recenter. This particular filing is all about item 5.03, which covers changes to the company's foundational documents. It is not about financial performance in this instance, but rather the corporate structure that underpins it. Scrollatum 9.01 Financial Statements and exhibits signed to the report also lists the exhibits attached, including the crucial certificate of amendment itself. Center Sairish Apajoshula, Chief Executive Officer, Tree Center. The report is signed by Sairish Apajoshula, the Chief Executive Officer, indicating this a top-level corporate decision. Now, let's talk about what this means and why it matters. When a company like Tharimmune drastically increases its authorized shares, it is often a signal that they are planning for significant future events. It could be raising capital to fund research and development, perhaps for new drug candidates given their name, or it could be preparing for a strategic move that requires a substantial number of shares. Think of it this way. If you are planning a big expansion for your bakery, you might need to authorize more space in your building or get permission to buy more ovens. For Tharimmune, authorizing more shares is like getting ready to add more ovens or even build a whole new bakery. The fact that they are an emerging growth company means they are still in a phase of development where such structural changes are common. It also means they might not be subject to the same immediate reporting requirements as larger, more established companies. This can be good for flexibility, but it also means investors need to be extra diligent in tracking their progress and understanding their accounting practices. In essence, this filing isn't showing us their profit or loss, but it is a critical piece of the puzzle that tells us about their future intentions and their capacity to execute them. It's a backstage look at the corporate machinery, something that can provide valuable foresight if you know where to look. So, what is my take on all this? Tharimmune is clearly positioning itself for growth or major strategic initiatives. The massive increase in authorized shares suggests they are at a point where they anticipate needing to issue a significant amount of stock, either to fund operations, make acquisitions, or perhaps even to execute a reverse stock split. This is standard practice for companies at certain stages of development, especially in the biotech or pharmaceutical space where capital-intensive R&D is key. However, investors should see this as a prompt to look closer. What is this capital for? Are there new drug trials planned? Are they considering an acquisition? Without further information, this could also be a move to dilute existing shareholders if not managed carefully. The extended transition period for accounting standards for emerging growth companies also means investors need to be extra vigilant in understanding the financial health and operational efficiency of the company. It is a sign of potential and preparation, but it also carries the inherent risks associated with growth and strategic maneuvering. Alright, that is our breakdown of Tharimmune. S latest filing, what is your take on these structural changes and what they signal for the company, S future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.